Luxury stocks are bouncing back, but only for a few names. Despite warnings from Wall Street about a slow recovery in China and less demand in Europe, companies like LVMH, Hermes, and Cartier have had strong seasons. Here to help break it down and discuss trends going forward is Pauline Brown, former chairman of LVMH North America and current CEO of the advisory firm Aesthetic Intelligence Labs. Thank you for being here. It's good to see you.
Thank you.
So it has been sort of surprising that we have seen some of sectors of luxury hold up pretty well here. What do you think is informing that, and why have we had some that have done quite well and others that haven't?
Well, it's definitely not a factor of the sector. It's really a factor of the brand. The powerhouse brands, Hermes, Brunello Cucinelli, Moncler, they continue to shine really bright. The laggards, Burberry, Ferragamo, Lanvin, they are struggling just to break even. They are struggling just to go flat. And so there's this increasing bifurcation between the high performers and the rest. And there's also an interesting divide among the consolidated players like LVMH between the diversified ones like LVMH and the less diversified ones like Estee Lauder, which is all in beauty, or Richemont, which is mostly in watches and jewelry. The latter have not been doing nearly as well as the diversified players.
How much, Pauline, do you think, kind of the momentum we're seeing here with a luxury shopper, how much would you pin on that in the stock market?
Some, not a direct correlation. There are definitely segments of luxury spenders, high net worth, ultra high net worth, whose net worth is very tied up in stocks. And when they're feeling confident, when they have events and travel and all the things that go with the stock market, they spend. But most of the growth of the last decade or two has come from aspirational consumers. And I'd say the housing market, jobs, other factors have more played into whether they're in the mood to go shopping. And they are, by the way, they are shopping.
Yeah, it seems like. I mean, it's also interesting if you look at the trend that we have seen among middle-income shoppers to do stuff instead of buy stuff, right, over the past year. How is that playing out with the luxury shopper? Are they just doing both?
Well, some of it is when you do stuff and you are visible,
you also want to look good.
Yeah, have to look good. So there's always a bit of a compulsion to buy stuff to look good while you're doing stuff. So that certainly plays out for travel and for weddings and other big occasions, even for going out to dinner. The reality is there is some shift going on in terms of experiences versus goods. And what is a really interesting trend, which I'm going to continue to watch, are the bigger luxury brands going into hospitality. So for example, Vuitton will be opening its first ever hotel in Paris, Vuitton Hotel. RH, another business, home furnishings based here in the US, they opened a very successful restaurant, starting with the one here in the meatpacking district. Dior, Christian Dior, has a patisserie, a cafe, in their French flagship. So I think you're going to see that. I don't think those initiatives make money. I don't think they're very profitable, but I think they bring people into the store.
Another big topic, Pauline, we talk a lot about on this show is China. What are the trends there with regard to luxury shopping?
A few things. First of all, they're much more discriminating now than they were 5 or 10 years ago. So if I said before there's a bifurcation between high-performing luxury brands and the rest, I think the Chinese have shown a level of sophistication that is playing into that as well. Secondly, they're not spending while they travel to the same extent that they did. So they're spending a lot more at home. They are traveling. They're not traveling to the US or Europe in the same numbers, but they're going to Korea and to Japan. But they've become accustomed to shopping locally. So where they're buying has shifted. And here in the US, if you speak to any of the local luxury general managers, they saw a huge drop-off in Chinese shoppers visiting the US for that very reason.
To just drill down again into that bifurcation that you alluded to, is it a matter of execution? Is it a matter of creativity in terms of offering what people want between the ones that are doing well and the ones that are not doing as well? What's the distinction?
Well, yes and yes. It is both of those. What I would say is you take a gold standard like Hermes. Yes, they execute well. And yes, they have first-rate creativity and artistry and craftsmanship. But they also have, I think, managed this very delicate balance between heritage and modernity. So how do I stay true to what I have always stood for, and how do I continue to create new desirability and feel relevant to the times we live in? Many of the luxury brands, particularly the younger ones, I think have gone way too heavily into the trend, into the contemporary, into digital marketing. And I think in the process, they've lost their roots, they've lost authenticity. And they also have overexpanded in an effort to be so commercial. Whereas Hermes has been very, very disciplined in not overexpanding. If they wanted to double their business tomorrow, they could. But they know that if they want to be around in 100 years from now, they better restrain that growth level.
Oh, that's interesting. Sustainability from another perspective, I guess.
And yeah.
While we have you here, we're sort of in the midst of fashion season, right, with all the shows. And I just wanted to get your take on what role those shows, the catwalks, play in this era. I mean, like I was telling you in the break, I was seeing some shows on social media that were fun and caught my attention for the first time in a while.
So I am of the mind that in the years to come, that let's call it the bottom 80%, will pull back from that trend. The return on investment is not good for them.
It's expensive to put them on.
It's very expensive. A global brand, the brands that we've referenced earlier, can spend upwards of $15 million on a single 10-minute show. And nobody's buying those clothes, right? They're not featuring clothes that they necessarily would have in the stores. They're not making a lot of those pieces. It's all about image. It's a way to stay relevant, to get editorial coverage, but more and more, it really is just a social media play. Back in the day, and it wasn't that long ago, there were two people in the audience, two types of people. You had the editors and the merchandisers who were there to place orders. Now, when so many of those brands have their own stores, so they don't need to sell to Saks or others, and the editors, Anna Wintour and others, aren't really determining what's in, what's not, vis-a-vis social media influencers, that whole dynamic has gone away. And so I think if anyone were really looking at it as we look at other marketing metrics, they probably question whether they should continue doing it, given all the noise, given all the competition, and given that most of them are really making money in other parts of the business.
Interesting.
All right. Pauline, thanks so much for joining us today.
Good
That
to
was
see
really
you.
helpful. Appreciate it.
Good to see you.